Good morning, everybody. Welcome to Market Moves. I am the money lady, Cheree here. Thank you so much for being here. So, we've got a lot to talk about because there was a big announcement that happened this week. And if your guess is the Fed reducing rates, then you are absolutely correct. So, we're going to talk a little bit about that. And what happened with mortgage rates may surprise you, actually, based on what the Fed said. We're also going to talk about four different opportunities for my realtors that are out there, my real estate professionals, and we're going to have a good time. So let's share the screen here and get us up and running and ready. Okay, so this is Market Moves. I'm the money lady. Today is September 19th, 2025. And the purpose of Market Moves, oh, sorry, the agenda, I should say, is we're going to talk about the Fed reducing rates. Now, what happened and what can we expect? A little bit of employment forecast, for opportunities for realtors, and a way for you to move your listings faster. So, the purpose of market moves is, especially for my real estate professionals in the Northern Virginia area, for you to hear some of the uh, headlines that we have economically, and then for you to be able to know what's happening so that way you'll know what's happening with rates and things like that. And also, as you're doing your open houses this weekend, or you're speaking with buyers in general, you will have, some talking points and some information that you need in order to engage with the public with regards to buying and selling real estate. So, yes, this week the Fed cut its rate. There was a 25 basis point uh, rate cut. So, a lot of people were celebrating. However, the markets for mortgages, we're not necessarily celebrating. Why is that? Because a Fed cut does not necessarily mean the mortgage rate was going to be cut. Actually, the interesting thing is that the Fed cut its rate by 25 basis points, but mortgages went up slightly. Um, and the reason for that was because of the things that Jerome Powell actually talked about during his Q&A session. And the markets already included 2 to 3 rate cuts between now and the end of 2025. And the reason why mortgages were starting to creep down a lot more over the past week or so was because people thought that the Fed was actually going to reduce rates 3 times by the end of 2025. Well, as Federal Fed Chairman Jerome Powell was speaking on Wednesday, he kind of hinted that, hey, we're going to move a little bit more hawkishly and slower than people might have thought. And because of that, the rates went up a little bit over the past couple of days. It didn't go up significantly. It's now at 6.37% for a 30-year fixed. So, remember, this 6.37% are for our people who have really good credit scores, really good jobs, stable W-2 income, things like that. So, but we are seeing people even get into the high fives with regards to the rates being locked in over the past week or so. So, the rates are going down now. We're happy about that. It's at its lowest uh, rate since last year. And yeah, so we also heard from Fannie Mae a few weeks ago that they expect rates to get into the fives in the latter part of 2026. But I will also say this to you as well, for you to tell your buyers that the for every 1% drop in rates, another 5 million people are expected to come into the housing market as a buyer. So, having people aware that It's not just about the rates dropping, it's also about the competition that's around them. Right now, we have about a third of houses that are on the market in the Northern Virginia area that are experiencing price decreases. So, for certain people, it may be wise for them to purchase now and refinance when the rates get a little bit better. So, in our company, for example, we have a program where if you purchase your property today and you refinance within 24 months, we will refinance that borrower with no lender fees being charged. So, that's just something for them to consider with regards to the best time to purchase a home, if they can do it, maybe now before the gold rush comes in next year. So Powell says that rate cuts again are not a sprint. He is hawkish. Out of the governors that they have, only one of them voted for a 50 basis point reduction, which was a guy that Trump appointed. The other Fed governors all voted for a 25 basis point reduction. So again, because of this, market got a little bit skittish. The bond market is what controls the mortgage rates, and the bond market got a little bit skittish. The other thing is that the Fed is not only looking at inflation between now and next year again, making sure that tariffs are not going to impact the cost of goods significantly, but they're also looking at employment. Employment is softening now. Employment is softening now. And I read a report that said, I think I might have it in here, that said that the majority of companies are not planning on hiring. And I think there was like 40 something percent of companies are actually thinking that they're going to lay people off between fourth quarter of this year and next year. So I think I have it in here on a later slide, but we'll talk about that as well. So Powell says again that the rate cuts are not a sprint. Again, he is trying to balance this tricky economy. Um, just to let you know that Jerome Powell's time as being the head of the Federal Reserve is going to end in May 2026, and President Trump will have the opportunity to put his own appointee in there. So we can pretty much expect, that the Fed is going to be kind of hawkish right now. But when that new person is appointed, who is going to be a Trump appointee, the rates may end up dropping a lot more quickly and drastically towards the end of the year. And again, remember that the Federal Reserve's rates are do not work at the same pace as mortgage rates. Mortgage rates actually will look at what's going to happen over the next 18 months, and our rates will actually be included, well, sorry, will actually include what we think the Federal Reserve is going to do. So this is what I was talking about with employment. From resume.org, 6 in 10 companies plan to lay off employees in 2026 amid economic uncertainty. So and I did read this article, it was a good one. They talked about the fact that there were quite a few companies who said they've already laid people off. Other companies are saying they're going to lay people off. The reasons are because of uncertain sales activities within their organizations, as well as AI being a part of they're going to replace human beings with AI for certain functions. So if we have a flood of additional people looking for employment, softer employment happening in the economy, then that it will also impact the Fed lowering rates. So the crazy as it sounds, the softer the economy, the better it is for rates. So, all right. So, what are the opportunities for you as realtors? I have a few things that you can think about. Number one is just starting conversations with the people in your database, the people in your network, whether you are posting things on social media, DMing people, whether you have an email list, you're texting people, saying, hey, did you see that the Fed cut rates? Do you have any questions about the market? Do you have any questions about what's happening in the market? Can I maybe pull a list for you of properties? We're seeing right now a lot of realtors starting conversations with their buyers in or prospective buyers with regards to the Fed cutting rates. And this weekend will also be a great time for you to put those seeds in for people who want to buy fourth quarter 2025 as well as in 2026. Also, in August, new purchase mortgage applications went up by 1%. We are already starting to see, as rates are going down, more people are starting to think about buying, whether they're buying their first homes or whether they are moving up into a new home. And I have a lot of clients like that right now, a lot of borrowers right now on the mortgage end that's actually doing that. Um, we also have a lot of investors, which I'm going to talk about as well, who are purchasing homes for themselves in order to house hack. Had a great conversation with a woman yesterday. She's got a nice size family and she's looking for a property in Northwest DC that she can turn from a one unit into a two unit. And we're even talking about a renovation loan, a home style renovation loan, or actually, she's a VA. So it's going to be a VA rehab loan for her to purchase a property and turn it into a two unit. So that way she can get some cash and some cash flow from the property that she's living in. So we can have all sorts of conversations with people about this. Another group of people that are starting to really think about purchasing properties are millennials. Millennials are, well, I don't know the upper ages, but I think they're late 20s to early 40s right now are millennials. So they're thinking of either purchasing their first home or they're getting married and they're thinking of, settling down with a spouse, having their first or second kid, things like that. Uh, I saw a stat last week that said that about 87 trillion dollars of wealth is about to transfer, and the majority of that money is going to transfer to our millennials. And you may say, well, Cheree, what does that have to do with me today as a realtor? Uh, Ask your millennial buyers if they can get a gift from mom, dad, grandma, grandpa, get their inheritance in early to help pay for the down payment and closing costs for the homes that they're going to purchase. There are a lot of grandparents who would be more than happy to help their millennial uh, descendants, their millennial family members actually purchase those first homes or those next homes as their families are expanding. So just again, something for you to think about as you're speaking with millennials, even though they're concerned about affordability, and there are ways for you to address that, they're really starting to get into the market. Another opportunity for my realtors out there is in regards to consumers having, credit problems or consumers just wanting to beef up and increase their credit scores. Well, now more consumers are using rent payments as a way to boost their credit scores. So it depends on the landlord, and if the landlord can report credit to the credit bureaus. But if you have a borrower or a buyer, I should say, on your end, who is trying to figure out how to increase their credit score, and they have a landlord that will report their on-time payments to the credit bureau, that could be a great way for them to increase their credit. And I will say this as well. We within our company have a guy, we call him Credit Ryan, and he is really great not only at helping people with strategizing about credit, but also he has a list of creditors. He knows which ones will take 10 cents on the dollar or 15 cents on the dollar, and he knows how to work with your buyers and the creditors that they owe in order to set up their credit so that when they're making these payments, that the credit scores actually increase. So contact me if you want an introduction to Credit Ryan. He does free consultations, and we just really think he's a great person to have in your toolbox and in your corner for your buyers. Also, the Maryland Mortgage Program. So, usually market moves are for my Northern Virginia realtors, but if you also sell in Maryland, there is the Maryland Mortgage Program, which is a down payment assistance program for Maryland people buying in Maryland. And there are a few different programs. They go up to 5% of the down payment as down payment assistance. They will also help with closing costs as well. I think up to $6,000 is what I've seen. And then there's a really good program, and this is a great opportunity for my Maryland agents. There's a really good program for people who work with Montgomery County. Working in the county, I think they get up to $25,000 worth of help for down payment and closing costs. So I happen to be certified and have taken the training with regards to the Maryland mortgage programs. You can check it out online. And then if you have a buyer who wants to buy in Maryland, but they need some down payment assistance and they have to have at least a 640 credit score, let's talk about getting them into some of these really great programs. And investors, investors, investors. So, in order for our investor clients to take advantage of some of the tax breaks in the big, beautiful bill, they have to buy a property by the end of the year. So, I call this Christmas money, and you'll see on my next slide that I have like Christmas money. If you want to make Christmas money, reaching out in your database to your investors and asking them what properties they need to purchase. Or if they think they want to be an investor, let's say you have somebody who makes a lot of money, but they make a lot of W-2 income and they want to reduce their taxes. Getting them to purchase their first investment property may be the way for them to do it. So there's immediate deductions for the 2025 taxes. There's bigger deductions for the state and local taxes. And they're also able to write off things through cost segregation, and they can write off different repairs that they do within their properties as long as they close by December 31st. So I'm getting a lot of calls now from investor clients who are saying, I have to buy before December 31st. And again, that's a great way for my realtors to get your Christmas money is to focus on those four groups. Focus on your millennials, focus on people in Maryland that want to buy. We have a down payment assistance program, focusing on your investors and focusing on people who want to house hack and people who want to get into the market before the gold rush comes in, and the gold rush being a whole lot of people coming into the market most likely in 2026. So final opportunity that I have for you is for people who do listings. I've been working with some realtors with regards to instead of doing a price reduction, you are able to offer those potential purchasers, those potential buyers, a permanent rate buy down. So if they can go, for example, from a 6.75% rate, this may be somebody who has like a 700 credit score or, a 680 credit score, something like that. Then go from 6.75 to 5.5. Your your seller would be able to offer them the money in order to do a rate buy down, and that buyer would save $244 a month. So it could be a win-win for both you as the realtor and the seller and the buyer. So again, just thinking about that. And the reduction, sorry, the amount that the seller is going to pay in order to reduce that interest rate to 5.5% and save that buyer $244 a month is going to be less than $40,000. I'll just say that right now. Okay. Um, so there's some upcoming economic reports that's happening, and we just care about these because we want to know over time what the Fed is thinking, what their sentiment is, because these numbers will forecast how mortgage rates are going to behave in the next 18 months. So the NAR existing home sales, the manufacturing survey, the advanced durable goods, and the personal income deflator numbers are coming out next week. Definitely, I'm going to be keeping up with all of these for you. So, buyer strategy sessions are available. Loan consultation sessions are available with me. I start off with a 15-minute phone call, and then we do a pre-approval strategy based on that person's application. And I'm on call this weekend, 571-583-4600. You can either call or text that number. Let me know, what your buyer's needs are. I actually had a realtor call me because his other lender was not getting back to that buyer, and that buyer actually wanted to put an offer on a property. So we got that person pre-approved in about 9 hours, got his pre-approval letter to him, and the realtor is actually negotiating right now seller credits and things like that with a property that has been on the market for about 50 days. So it's a really great opportunity, win-win-win for everybody. So that is it for me. Thanks so much for being here for Market Moves. Again, I'm the money lady. If you need my assistance, I'm definitely here to assist you. Have a great weekend, and I'll see you next week. Take care. Bye.